Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, we're still seeing an economy in a very strong position, and that's very much been starting to filter through into the labour market.
Yeah, that's right. I mean, we've had some tight numbers coming out in terms of ability to find workers. Job churn is up as well. And we know that that's starting to translate through into, we've seen job numbers rising, of course, quite strongly, and unemployment falling. Latest monthly economic indicators are out, and I understand they were pretty strong. You've been looking at them?
Yeah, absolutely. 1.1% seasonally adjusted monthly change, really strong. The strongest, monthly change in 2.5 years. And I think what we're starting to see is very much that tightness continuing to bite across the labour market. Those filled job numbers up in a very strong regard, but also I guess there's sort of underlying strength in them. And I say that because it's not just a one-off increase. It's been building the last few months. We're now far and away with more jobs now in the economy than we found ourselves pre-pandemic. And all of that, those indicators are pushing towards sort of those capacity issues that we continue to hear. What's interesting as well is looking throughout the numbers, what's quite clear is that we're seeing still really strong growth in some of our already strong drivers, the likes of construction job numbers and health job numbers, both rising over 6% per annum in the June numbers. And I say that's impressive because they've already been strong. It's not like they dropped last year or had a softer patch. They have been sort of in this rolling, increasing regard in recent months. And sort of that just suggests, again, that real need to bring more people into the sector. North Island's doing a bit better than the South Island, which I think reflects both an element of tourism generally, but probably more importantly, people's ability to travel and move about in the North Island to do sort of shorter term, more flexible trips is helping support the services industry a little bit more than in the South Island, has had a little bit more disruption also with weather and similar there in the last few months. So overall, a much firmer result and very much highlights the expectation for the unemployment rate to fall further in the June quarter and as we head forward.
Yeah, so sitting at just over around about 4.5% the unemployment rate. Any picks for where it may have gone in June and through into September quarter? Are we talking getting down to that critical level of 4%, which would really be something I think. I mean, the Reserve Bank will already be sitting up to take notice of what's going on. But if you get down to 4%, we know there's wage pressures out there. We know there's a lot of cost pressures as well. So they must be watching these numbers pretty closely.
Yeah, I'd suspect so. I mean, all of those other indicators are highlighting that more people are being pressed into the workforce. Certainly, the unemployment rate looks set to fall below 4.5%, currently sitting at 4.7 in the March quarter. And that direction downwards does seem to be very much the focus. We know that job seeker numbers as well, a partial indicator, if you will, continuing to fall. And because of that, there's interest as well, I think, on not only what does unemployment do, but what does the underutilization rate and underemployment do. We've seen that not only are job numbers stronger, but actually earning numbers are stronger still. And that highlights that you've probably got people who are either working longer or working more in some regard, which is helping support activity. What's interesting, though, is when we get this close to those low levels of unemployment, that sort of 4% or so, we're really starting to press a lot of people who we previously haven't been looking to get into employment back into a job. Businesses screaming out for workers, poaching where they can, but also trying to find a new pool of talent. So people who might be less suitable to jobs or certainly less suitable previously, they're now being pressed into work, businesses looking to find those options. Now, that's going to be important to help deliver on some of the very high levels of demand we're seeing across the economy. And in fact, it's going to help keep it there, right? Because if households are getting more money because there are more jobs around, that's more money to be spent. But given we've still got restraint on actually bringing in some materials and actually having enough workers to do all of this work, means that there's still going to be quite an amount of heat coming through. Those inflationary pressures will build, and there's an expectation certainly that the Reserve Bank's got to take heed not only of that stronger inflationary pressure, 3.3% in the June quarter, but also we've got to be getting close to whatever they're now defining as maximum sustainable employment. Both indicators in strong positions means that it's going to be harder and harder, I think, for the Reserve Bank to ignore those expectations.
Yeah, and I think looking at the other indicators coming through, you mentioned household spending and how this is good news for it, and we know that's been holding up really well over the last 3 to 6 months anyway. But obviously, with these sort of numbers coming through, no signs of that slowing. So that sort of supply and demand imbalance that has really been, leading to the inflationary pressures, that demand side of it is going to, continue to run ahead, I think. And little sign or little relief there for businesses in terms of, well, not that it's a relief when fewer people are walking in the door, but gee, there must be a lot of people. Construction, one of the most obvious areas where they just run off their feet, and you don't really want more work coming through. So yeah, it's a interesting situation to be in at the moment with that labour market.
Very much so, and I think there's also going to be higher pressure on wages as we move forward. We know that there's already that sort of pinch in terms of trying to get more workers in, to try and maybe attract different workers and also retain the current workers that you've got. All of that, again, just adding to those inflationary pressures. So certainly, a better position, and we're seeing more people getting into jobs, more spending, but also definitely that warning that inflationary pressures are starting to hit. And all signs are very much adding up to the Reserve Bank having to do something sooner rather than later, at least to placate or start to address some of these hot issues. We'll continue to assess where that's going, what the Reserve Bank's next move is, and where to next rather for the likes of spending and employment on one of our future editions of Econ Talks.